All right. How is everybody doing? Okay, let me get this situated. What's going on, Lorna? What's going on, Chad? Mirza Lee. All right. So, everyone, and I believe YouTube Live and live, all the lives. Social media is crazy, right? All right. Well, today's subject at hand is going to be how to adjust your trading plan when the markets change. And I feel I have a pretty good little grasp on presenting this information for one, really because I've had to adjust my trading plan actually when things changed, you know. And so for me, like my title here at Simpler Trading is Director of Weekly Options Strategies, right? Well, now I don't even trade weeklies really. I just really focused on the smaller time frame. And but now I actually just do the overnights and 0 days to expiration stuff. But we'll talk about that, and I'll also explain how I did, what I did, and all of that nature. Let me split this up real quick so I can see if any questions come in over YouTube Live. Assuming it's running over there, but hey, we'll find out. Okay, so, but believe it or not, I put y'all guys together a little presentation. That is just how much or how important I believe this is. All right, so you like how I created that there? That's pretty cool, right? All right. So like I said, how to adjust your strategy as the markets change with Kody Ashmore. Like I said, my title is the Director of Weekly Option Strategies. So let's kick this off. Not with that button. All right. So first, let me before I really go into how to do it, I want to explain to you how I started and how I adjusted. All right. So my older trading plan. Those of you in the Simpler Trading free room, this plan right here is literally in the free room drive. Those of you on YouTube Live, Facebook Live, all the lives, if you're interested in this plan, it's for free. Sign up for Simpler Trading free room. Go in the free room. It's in the room drive. Have at it. But it's not. It wasn't difficult. But this is how I used to trade. So basically, all I did was trade three setups. And in a rolling 2 week period, I always had five positions on. Put them on the following. They would always be like 10 to 14 days of expiration. And I'd be putting trades on 1 week and then taking them off, but while putting on positions onto the next week. I just continued to keep rolling. It was my little version. I guess you could call it income trading, I guess. In a sense, I was basically I was getting 65% on average on all of my trades, and but I did it in a way to like income trading versus looking for ginormous moves. Right. So that was my options position. But the setups I traded were pretty, as you could guess, were the squeezes. Like I used the Squeeze Pro, and I also use the multi 10x bars on steroids setup, which is basically you get a 10x bar going in a larger trend direction, and then you pick your level where you want it to enter, and you get triggered in by a buy or sell signal based off the high of low bar or low, sorry, the high of low bar and low of high bar for entry. So you have a really small risk to reward. And then say if squeezes weren't setting up or I couldn't find a good setup to facilitate my rule, my trading plan to have five trades rolling, I would look for a ticker that already has squeeze fired, and then it would be 2 to 3 days into the consolidation phase, and then I did an iron condor playing the expected move. So that is how I started. In fact, this is how I kind of got noticed by Simpler, to be honest. Like I have a bunch of videos on this on my little YouTube channel on how I was doing this. But the market changed, right? I was rocking and rolling pretty good with it, and then things changed. But how I changed, I'll talk about later. But before we talk about how to change your strategy, first you need to identify, did the market change or are you not following your plan? That is the very first question. Because it's easy to assume, oh, the market changed, it's not working. Well, first take a step back before immediately assuming that and make sure it's not you. So, how can we identify those areas? So before, like it says here, before making those adjustments to your strategy, identify if you've been following your plan first. And the easiest way I can say to do that is journal your trades. You need a trade journal. It doesn't matter if it's. I would suggest if you want to use. I don't really think paper is the right way to do it because, like I have say there, you need screenshots of time of entry and then document your plan when it's unfolding. Or sorry, document your plan before it starts unfolding. So you know what you're looking at when you got in. You know what your plan is before you started to get scared, euphoric, or before any emotions were involved. So you put it's all documented there, and then you can review it later. So for me, how I noticed I needed to change because I was like, man, my consistency is not where it used to be. Doing that prior trading plan, I was at about a 70% success rate. And then all of a sudden, it was like nothing was working. Even the setups I was trading, and so some adjustments had to be made. And the first step to identifying there was a problem is for one, journaling your trades, how they're reviewing. I personally use traderview.com because you can upload your screenshots and everything in there. And when I saw that decrease, I was reviewing my trading plan, like I've mentioned. And some things to think about when it comes to the market was what has changed. Was the market trending? Did it get extra volatile? Did it become choppy? And when I say choppy, more of chopping in a wide range. There's a bunch of different variations. All right, so say you evaluated your trading plan, right? Or your trading plan and your trade journal is what I mean. Okay, but you discovered it was you and not the market. And this is I probably read the subject and probably took it off a different way. I just kind of viewed that I imagine a lot of people's trading plans got thrown a curveball, and this is how I think is the best way to address those situations. So, like right here, so say it turns out the market didn't change, and it was you. The best way to do it, I think, is to review your trading plan. Like literally have a typed hard copy of your trading plan on your desk. If you need a trading plan template, go get mine from the simpler trading free room. Erase everything I have in there and put your information in it. Like it is literally a trading plan outline. You could go get it, and then once you have it typed, have our copy on your desk, and then review it every morning before your trading day. And then some people don't trade every day, which is fine. Just before you start placing trades, review it whenever. Just it gets to a point to where you know what you're going to do every time the more you look at it. And then say your consistency, like it's you and not the market. I would suggest paper trading and document your trades as if you would if they were real. And the reason for that is to prove yourself you got your consistency back and then you can follow your plan. And then after that you could go ahead and go live. Like for me, from my example, um a few many years ago, whenever I first started trading at the firm, I was like, I was hooking and jabbing. All of a sudden, consistency went down. I was like, man, what's going on? I was talking to my risk manager, and so we evaluated my trading plan, evaluated my trades, executed, and then somehow subconsciously, and this is when the market was a full of bull market around when Trump was first elected, right? And we all know the market went up for quite a while after that. Um, I subconsciously somehow kept on getting more bearish than I should have been. And I was like, wait a second. Like I had it like it didn't even click in my mind until like it was told to me and I looked at it and I was like, oh man, you're right. Why am I doing this? And it was just so and after that you needed to be able to like identify the reason I mentioned that is because after that I had a paper trade and it helped me get confidence that I was following my plan again because it happens. All right. So continuing on. We good? Any questions? All making sense? What's going on, Coop? Alberto? Ricardo? What's going on, Matt? I'm assuming all this is good over here. uh, yeah, all right, cool. Chad, you're good. We got Toby. What's going on? All right. So that was one area of it, right? To where it wasn't the market. Market didn't change. It was you. You had some subconscious issues going on. And now, we'll say in this case, you have a plan and you follow it, and it wasn't It wasn't the market. So here's the things to consider. So this is where it gets to the adjusting your trading strategy. So like for me, like I just laid out what I was doing in the past, right? And ultimately, before I started reading kind of like what's through the slide and kind of breaking them down, in a nutshell, every daily time frame setup that you trade can also be traded on a smaller time frame. So, like, just the easiest example for this would be if you're used to trading daily squeezes. When the market gets a little bit more volatile, it's probably best to narrow it in to a smaller time frame. So, if you want to do maybe weekly squeezes or weekly positions, you would want to trade like a 2 hour squeeze. And if you remember a squeeze, its position, if you get in at in this case, a 2 hour 21 EMA, you're looking for that 2 ATR move, that's your trade. Boom. Um, but point of that is that you every setup can be traded on a different time frame. So that's why things to consider right here is I have two different times right here. So like time and options. How much time are you giving your positions? Or how much time is in your setup? So like if you're trading a daily squeeze, and this well, it's now starting to look like it's shifting, but we'll say the previous 3 months. Right? If you're trading daily squeezes, I would say they probably weren't as easy or as consistent as they were because it's a little bit more volatile. A squeeze is uh, it's a trending consolidation breakout pattern, basically, right? Setup, an expansion of price and volatility. Well, in my opinion, like it says there in today's market, if you're a lot of people like to trade the 1 month time frame, right? But your time frame might either be need to be narrowed down, like I mentioned that 2 hour example, or expand it a little bit to 2 to 3 month time frame. And then what you would do from there is trade the 2 to 3 day squeezes. And squeezes are just an example. That's just something I feel most people can relate here, and that's why I'm mentioning that one. But that is how you can make your adjustments: time in your options and time in your position outlook. And like I mentioned there, the difference is there. And then the thing about trading options as well is we have theta decay, right? It's either our friend or our enemy. Sometimes we need to adjust it. And so for me, or what I personally think is you put theta decay in your favor, which is what I'm all about, or you can take it completely out of the equation, which and when I'm doing that, I'm just trading straight futures. But like it says here in this example, when the market was trending, my 14 days of expiration trades were great. But when things got volatile, the whipsaw movement, since they're expiring so short, that the whipsaw movements can make my position go from, we'll say I got in for, we'll just say $2 debit, it can go all the way down to 50 cents worth of value really quickly because it's expiring so soon, right? And so when things got a little volatile, that's why I'm saying put the theta decay in your favor by giving yourself more time, or you do it out of the money, and that's one little variation. And but yeah, that's what I'm getting is adding more time to your options position to allow that whipsaw movement, but still going in the same direction. You still get where you're going without taking a larger loss than you're kind of expecting based off of that. And like I said, or you take it out of the equation, you can day trade, do 0 days expiration trading, or just trade futures where it's not even there. All right, cool. Continuing on. Bam. All right, things to consider. Continues. This is something I believe I'm like probably one of the only few people that think about this really, is position size for max loss. So this is really a great thing about options. You can position size to the amount you are fully willing to lose and not lose more than that, even if it goes to zero. So that's a great thing. So an example would be, let's just say you're going to get into a $5 wide vertical spread in anything. We'll call it Netflix. And if you're getting into it for $2 and you're willing to lose $200, instead of having a stop loss level of where price could go about $200, just buy one position for $2, so max loss of $200, and let it ride till expiration. You can literally do that. for my trade floor actually teaches you that. That's what they prefer you to do. You position size for max loss and hold it till expiration. That is what they prefer for you to do. Um, for some of the stuff they teach. But this is something to consider as well for making an adjustment to your trading strategy. Add or position size to max loss so you don't have to worry about it. It doesn't have to get too volatile or anything of that nature and shake you out. All right. And I believe this is the last slide. And feel free to ask any questions after this. But this is how I adjusted my plan with the way the markets changed. I literally trade one ticker. Oh, kind of. It's either the ES futures or the SPX, same. And it's either in a 0 days to expiration or I'll trade a trade overnight. And so, and you can see based on this presentation I given you, the way I adjusted to maintain or re-grab my consistency that I once lost was I went from going 10 to 14 days to expiration down to just 0 or 1. And I also decreased the noise by only trading one ticker and just doing the same thing every day over and over. Like I only mentioned Netflix earlier because someone was saying it was rallying. I literally have done zero scanning or sector analysis. Like it doesn't matter. I trade the one thing over and over. But those are some ways that I feel can help anyone adjust their strategy and trading plan as the markets change and just kind of ebb and flow. But those are some key factors I think that could change to help bring it all back to you. Got any questions at all? Same for you, Coop. Good to hear. That's all. I mean, it's been really just focusing on one thing. But it's really been quite I don't know. It seems like a lot less work for now. Anyways, who knows? Maybe things get crazy and it gets hard. um, so I want to make sure I'm not missing anything on the streaming side of YouTube. I don't think so. Oh, hold on. What's this? I guess none. Okay. I guess no questions on the socials. And it surprises me that you say you don't do sector analysis more. Yeah, absolutely. I don't at all, Matt. I don't. I like Ricardo's asking how to. Okay, the plan of attack thing. I'll answer that here in a minute, Ricardo. But I don't have to worry about it. I get the same thing over and over, and just yeah, it doesn't matter what's happening in the sectors or anything because I just focus on the one thing and just let it ebb and flow. The plan of attack, Ricardo. Actually, the plan of attacks I slowed down this week on it because of things have been a little bit crazy in the household. It's been a little more difficult to get done. It takes quite a bit of work for me to get that plan of attack out to everyone at a time. There's a reason why it's done at like 5:30 in the morning because usually I got to get my kids ready for school, get them to school, rush back home, get ready to do some trading in the morning with everyone. So it's kind of that's why it hasn't been done really. It's a good plan until the market starts to trend. Yeah, absolutely. Even if the market trends, I still would like this idea as far as trading the 0 days to expiration stuff. Because the way I used to be, and the way I even came up with the drama free trading stuff really was I would have like 5 trades on, we'll say about total like $20,000 in risk, and when the market got crazy, like I would take it all away and have to build it back up. And then with the whole drama free or 0 days to expiration stuff, instead of like trying to crank out, we'll just say like the 20K example, why not just make like 5K a day with no overnight risk, with putting theta in your favor and stuff like that. Do I have any setups that seem to be working on crazy slow days like today, Chad? Um, absolutely. Well, there's one I have one working right now. Let's check it out. Let's see if it's still working. Yeah. All right. So, in the small account mastery today, we did a at the money within the expected move butterfly. So we got on the SPX, we got 1570 a credit, and right now it's just a slow burn. Then that theta just burn as long as it stays within this cone. I'll collect some money. So for one position, you're risking 930. If it pins, which it probably won't, you get 15 grand. I'm not, or sorry, 1500. And I'm just looking to Gotta let the theta burn. But this has actually been working quite well. Iron Condors work as well, but this was just something that seemed to work well. I like the risk to reward aspect to it, and I also liked where the market was for that probability as well. But this is one example, but Iron Condors work just as well. Absolutely. But yeah, that's what I've been doing, Chad. What's up, T-Bird? What is the decision tree for doing overnight? Well, the very first thing is I look on yes, Martin. It was the Tom Sosnoff butterfly thing. So I added a little bit of technical analysis to that theory and played it out that way. I know he's just a numbers guy. I was like, well, if I use technical analysis, how can I add his stats to my technical analysis bias and play it that way? But my T-Bird, to answer your question, decision tree on overnight, like we've been doing overnight iron condors, things like that. That is really comes down to first, let's check Forex Factory, um, and make sure there's no news overnight. Like tomorrow is the final GDP, things like that. So tonight I won't be putting one on. But if there's no news, then you could play it that way, and you can play within the expected move or kind of forecast. Like for me, also where I'm trying to look for price to go, I will look at these basically these three setups or timeframes. And so, in a nutshell, right now we have a hourly squeeze that's still pushing up. That we have a 30-minute squeeze that's building up in a bullish aspect, and the 15-minute squeeze still hasn't even fired as we're pushing higher. So in this context, say we had no news for tomorrow, I would do a bullish biased iron condor in the expectation that these squeezes and prices are going to continue higher that way. I'll try this here. We'll see there if that works there. But that is one way how I do that as far as picking that direction. And Jay, market sentiment option sweeps? No, I do not for picking market direction. This is all I look at is this. I forecast. I will look at today's price action and be like, okay, how do I anticipate forecast, right? How the next candle to close, right? How do I think the next candle is going to close? So based off of this information that we have in front of us, get my pin. There it goes. All right, so we pulled back to this 2-year point of control, and we're pushing up, and now we're starting to break this high. Like tomorrow wouldn't be a good example, really, because of the GDP. But this right here, this orange block right here, is the HVA level, and I also expect this to kind of be resistance. So basically, in a nutshell, depending on how we close, you can kind of place an iron condor, expecting price to kind of go pop into there, or even structure it a little bit differently. You could even do half this candle's body and then up to here. But just looking for price to basically not take out this entire or this high. It's just those are some considerations I do when entering the position. Kind of like forecasting, I guess. Like I said, sounds cool when I say that. Yeah, price action, point of control, squeezes, things like that. But that's in a nutshell. That's it. And I'll also use the quant pivots for a little bit more of a statistical edge. And nothing wrong with shielding from that, Matt, from the overnight volatility. Absolutely. It was very interested in my approach to those tasty butterfly analysis. Have some difficulty with Tom's numbers. Interesting. Yeah, it's definitely was. His numbers were pretty interesting in that video clip, but yeah, that one was I'm adding a little bit of technical analysis to it, and within the expected move was how I adjusted to it. So that credit butterfly you showed us was overnight from. No, actually, Chad, I put it on this morning. We entered the trade at 8:54 Central, so roughly almost 30 minutes after the open. These could also include price levels in my plan of attack instead of EMAs. Point of control. believe I kind of do, T-Bird, don't I? Whenever I show like this little chart right here, if it decides to load. There we go. So we're above the point of control now. We did dip below it, rallied up above it, came down, tested it. But um, yeah, we'll try to remember that. I guess I don't focus too much on it because whenever I'm doing a trade based off of these type of methods right here, right? Or chart it. So like if I'm doing a drama free trade, I'm not too concerned. I guess with levels too high above because I'm just trying to make sure I'm on the right side of the market for the day. So like a drama free trade today could have been like it came down to here. We got our trend rotations, and all you do is put on a put credit spread. You're just looking for that theta to go up, and then just collect 80% of it. But that's kind of I will try to remember that there, T Bird, because you asked nicely. Let's see here, going through the questions. All right, how did I decide the butterfly trade today? And then Adam, you want to see a show one more time the iron condor I did? Sure. Like this right here. You want to see what this looks like? It's an iron fly. It's so basically in a nutshell, it's a butterfly or it's iron condor where both sold strikes are the same. So it's iron fly. So I did iron fly to collect premium from both ends instead of just one end. And then the reason I chose to do that is because with the market being up so much, right? It kind of makes it hard while we're up here to do a jump free trade because sometimes we don't get this pullback. We got it today, but we were already in the butterfly then, so it doesn't quite matter. But as the pullback came, um, and we're this close, sorry, this close to the one ATR, we are up already 1% at the open, right? So then I was okay. Well, I don't expect us to really fall down because, and the reason I didn't want expect price to come lower is really all because of the squeezes, right? All the squeezes were pushing momentum higher. So I wanted a bullish biased iron fly, looking for a price to potentially go higher. And so based on that, and then also that is GDP news tomorrow, but nothing today. Maybe sorry, that maybe there would be no huge additional move. So technically, since the open, we've only moved 0.18% because we've opened up percent. But that is how I came with that. And risk reward, the iron condors, I'm doing daily. The ones I do overnight, Alberto. Is that what you're referring to there? They're typically 1 to 1. They're about 20 wide, and then I don't say I'm doing them quite daily, but it is this butterfly theory I like, and I'm running with it right now too. But it's very similar to the drama free style, so it makes it okay. Looks like I'm doing a credit spread on both sides. Yeah, that's what an iron fly is, or an iron condor, Alberto. That's exactly what a iron fly is. So if you think about it, let me get my man. So over here on this end, here is the put credit spread. Over here on this end is the call credit spread. But if you make your sold strikes the same, it makes this triangle. So you're just putting these two pieces at the same strike. So it is a credit spread. Oh, do you tell me? Yeah, I mean, I'm telling you the. Okay, cool. You see it now, Alberto. Awesome. But yeah, that's kind of. I've been really enjoying these 0 days expiration stuff. Theta is on your side. Probability is on your side. Is there going to be a time it doesn't work? Absolutely. But I've been having some pretty good consistency with it. All right, Matthew. When I'm doing drama free trades, how early do I manage if it starts rolling back against me? If it's not a flash move, I really don't. I set my stop loss for 3 times the credit received and let it ride. If it gets triggered, then I take it off. But if not, I let it work. Matt, so yeah, I don't start rolling. I don't. As soon as I get in, I place my stop and let it work. There's no There's no intraday management needed for it. All right, cool. Um, okay. Am I trading? I am most often in the small account mastery atom, and I fill in on the options room sometimes as well. But yeah, that's it. Sorry about the plan of attacks here lately. It's been a little crazy at home, like I mentioned. But try to get those rolled out as well. But that's pretty much it. Any questions as far as like adjusting your trading plan and strategies? Things I covered, things not making sense. But ultimately, that's my thought process on adjusting things. If things get a little crazy, you can narrow in your timeline or narrow it or widen it out. But right now, for me specifically, I think the 1 month window is a little tough for now. But the lower than a month to maybe 3 months out is kind of the sweet spot for now. A YouTube Live, yeah, Alberto. See, the problem with YouTube Live is, well, for one, like my household, the way it works is I try to get you all the plan of attack, then I go get my kids up, get them dressed, get them fed, and I'm trying to post it while getting them dressed and everything. I can't do it live because as soon as I get home, the market opens like in about 8 minutes. So that's why I can't really do it live. It is something to consider if I let my wife retire, but we'll see. Because then if that's what she's wanting. She's like, I'll get the kids to school. You can do all that stuff. But you have a valid point. But cool. All right. Yeah, absolutely, Roberto. You got to do what you got to do. But everyone, but for those of you like, if you're not getting the plan of tech, if you are interested in that kind of thing, you can come trade it live with me in the Small Account Master. We do it pretty much every morning in there. If the setup presents itself. But I will let everyone go. Thank you very much for hanging out with me here. Hope everyone has a awesome rest of your day. Finish the week strong. We're only halfway in, and we'll see what happens. Honor your trading plan, everyone, and be disciplined. That's all I got to say. Awesome, Coop. All right, have a good day, everybody, and take care.